Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Tuesday edition of Benzinga's PreMarket Prep. Spencer Israel, Joel Elconin, Dennis Dick with you this morning. We've got news, earnings from BIDU, Home Depot, Kohl's, TJX, Lazy Boy, and Toll Brothers. After the bell today, we have Apple upping the ante in the streaming wars. Sarepta with some surprisingly bad news this morning. They got a complete response letter from the FDA for one of their drugs. We'll talk about that. The stock is getting punished. We have Bruce Lin, the former CEO of Canopy Growth, buying more shares. So we'll talk about that. And our guest today, Gil Morales. He's the author of the Gilmo Report and managing director at MoKa Investors. He will join the show at 8:35. In the meantime, Joel, walk us through what's happened here in the overnight session.
We got a nice range here, Spencer. We're up 3.5 handles at 29.27 We found support after hours right near that interday low. The interday low from yesterday, 15.5. Your current low, 29.16. That is the gateway to the downside. On the upside, we matched the high from Monday at 29.32 That's your exact high, but boom, we got some numbers in the 29.40 area that if we take it out and close above there, then even I will be convinced we're going back to new all-time highs. So top of the trading range, or we busting out to new highs here. You have crude pretty much flat, down 19 cents at 55.95, kind of building a roof here around the 56 area. See if we can bust out above there. Gold in the green by 320 at 1514.80, a little dip under 1500, but the gold bugs are back at it. Silver trying to get back over 17, up 4 cents at 16.98. And let me check Bitcoin here. Quiet as of late. Bitcoin futures basically flat here. 10,760. Dennis, we got a little rally going on. What are you doing out there?
Well, I'm actually very surprised with the TLT trading higher. I would have thought that would have put some weakness on the overall market here. It was weaker for a bit, but it's starting to show life here again. So I'm surprised. The market's trading higher, and maybe that does hold up. Maybe the TLT is just this is a little bit of a dead cat bounce, and maybe it's going to start to leak here again. Obviously didn't have the greatest day yesterday, being down significantly, although it did rally towards the end of the day. But I mean, that's what the market cares about right now is obviously China, and they care about interest rates. And we've been seeing this inverse correlation with the TLT in the market. That's not holding here today. So TLT is higher and the market is higher. That's interesting.
Some of the banks were a fade off that big open yesterday. I know Bank of America peaked early, sneaking back into yesterday's range. I do see Goldman and Morgan and Wells Fargo just slightly in the red here, but TLT up 73 cents, 144.77. Let's get to our earnings reports here, and that BIDU pulled a little surprise there. Spencer, what you got for us?
Yeah, after the bell yesterday at around 4:30 p.m. Eastern, BIDU reported a Q2 adjusted EPS of $1.47. That does not compare, I don't believe, to the 89-cent estimate. The GAAP number was more comparable. That was 96 cents. So they beat on the GAAP EPS. Sales $3.84 versus $3.76 billion. So that's a beat. Q3 sales guidance coming in line with expectations. And so a sales beat, an EPS miss, and Q3 sales beat, guidance beat for BIDU.
Amazingly, remember we priced the straddle here, and I was like, this is one maybe you can make some money on if you bought a straddle. And I was thinking if I could get it for $5, it'd be pretty good. And then we looked and we priced it, and it was $10. And I'm like, actually, I think it was right around like $9.79, which is exactly what it's trading here right now. So I was like, okay, I'm not going to pay $9.78 or $10 for a straddle here, so I'm out. And these market makers priced it perfectly, at least as of right now, because this thing is exactly up $9.78. They blew it away, but it just goes to show you again and again, it is very hard to make money buying options.
And just for you that are looking at the weeklies, I'm just going to the 114s here. They went off the board about 185, so they'll be juiced up with it up 977 here. They'll get the juice because of the price, but they'll take out some of the I guess it's called theta. But nice move for it. I think we've got some decent earnings reports out of these Chinese companies here. Regardless
expectations lower too, but that BIDU report was good.
Yep. Let me check out the pre-market action here. BIDU trading at 113.99, and you got right up here. We're bumping up against the pre-market high. Pre-market high comes in at 115.33. I don't know. Where could if this thing keeps on going, folks? I see a pair. I could go anywhere.
There's room to 120.
Yeah, I'll go with that.
There's room to 120, but am I paying up $10 to try to get an extra 6? No, I'm not. So I'm out. I wish, obviously, that the straddle wouldn't have been priced as much as it was, but they priced it perfectly again here. So good report for BIDU. We kind of had an inkling. I could have just bought the calls, I guess, for $5 and would have made money, but still difficult. You get the direction right, and then you're doubling your money. I guess it's okay, but they priced it all in pretty well. Hard to make money buying those options. But this morning we got lots of earnings reports here, some interesting ones. Let's start with the big gun, Home Depot. That's up $4 here this morning. They had this one right after hours last night because they were lifting it. A little help from CNBC's Fast Money. They were basically applauding it before the report, and it started lifting on those comments. Amazing how much those guys can move stocks. HD trading up 455. How's the report, Mr. Israel?
It was a beat on the EPS, 317 versus 309, a slight sales miss, 30.8 versus $31 billion, and they reaffirmed their previously issued guidance for the full year EPS. So it's just the slightest of sales misses to go with an EPS beat and a guidance reaffirmation.
And stock trading $4 higher here, $4.75 higher here this morning. You get up there near 215, 217, 218. I think you're running into an overhead supply issue, but you can't argue. The trend has still been up, at least for 2019. The stock was $160 in the start of the year. It's been moving higher here, so that's the good news. The bad news, I just see a lot of overhead supply.
Pre-market high right here. We're busting out right on the highs of the session here, right at 212. Let's see where we're at here. 212.76 is your pre-market high. I'm looking at the dailies here. Nothing like perfect to look at. I just see the 212.41 high. So I'll keep that. Let's even call it 212. You stay above 212. Yeah, got some area to go here on the upside. I see one high at 213, and then if you're really going to hold out, the high for the month at 217.61. But just got to hold on here. It looks like we're going to test that August 2nd high in a matter of seconds, and things really open up to 217.61. As always, keep an eye on that pre-market high. Even at 9:29 and 29 seconds, scribble it down and see where the big boys were playing, and use that as a swing area.
The underperformer and the laggard between the two has been Lowe's, LOW. It is lifting up 75 cents here in the pre-market. I wouldn't be surprised if it lifts more. If Home Depot holds up, the Lowe's has underperformed so much that I would not be surprised if, usually when I'm doing hedging tactics, I got a question from another person in the chat too on hedging. If I was to hedge Home Depot to Lowe's and taking it through a report saying, okay, well, I think Home Depot is going to, for instance, maybe I wanted to be short Home Depot for whatever reason, but I want to hedge it with Lowe's. I usually do 3-to-1 on Lowe's Home Depot going into a report, meaning I would do for every $10,000 you short of Home Depot, I would be long $30,000 worth of Lowe's to try to hedge myself out because they're obviously going to move a lot more because they're the leader. That hedging ratio would work perfectly here right now because the stock is 0.79%. But because Lowe's has underperformed so much, I would not be surprised if Lowe even moves a little bit more than that normal 3-to-1 that I normally do. So right now it's trading 3-to-1 because it's up 0.78% and Home Depot is up 2.5%. But I just think with that chart and the little double bottom from May back in place, I think there could be some buyers in Lowe's today too. Again, all depends on what Home Depot does. If it opens at 9:30 and starts to tank, Home Depot is going to be your leader all day. So keep an eye on Home Depot. When does Lowe's report?
Isn't it tomorrow? Don't they do it like the day after, Spencer?
Yeah, they're generally very close together. Lowe's reports tomorrow morning.
So there you go. Okay, so we're gonna get the report tomorrow morning. I wouldn't be surprised if it shows even a little bit more strength than it's showing already, as long as Home Depot stays strong.
You got a nice area to lean on at
Kind
least.
of.
Well, yeah.
I don't mind. I kind of like the Lowe's long better than the Home Depot long for some reason.
Also, Sal's making a comment here. HD looks like we're in a full blown recession here. LOL.
I mean, this recession talk was just ridiculous that day with the inverted yield curve.
Yep.
And I mean, it just got to a ridiculous level. Are we out of the woods? No. I'm still saying we've rallied here. If you're coming and buying stocks now, you're doing it backwards, like in my opinion. Look at the ranges it's been in the last 3 weeks. I mean, we get down the 282, 283 area on SPY, and we rallied at 293. Back down to 283. Back up to 293. Back down to 283. We're back up at 293 again. Well, it's worked 2-3 times already. Why am I going to fight that trend? So I'm definitely not coming here and buying at 293. It's not saying it can't go higher, but I'm not coming in and buying. I'd rather be buying the 285, 284 level if it gives me another chance. It's giving you multiple chances already. So I don't like chasing the fade trade. I'm going to continue to say it. Maybe not intraday fades, and we're talking different types of styles of trading, but from a swing trading perspective, it seems to still be working where you get a move of 2-3% in the market and it stalls out and then it goes the other way and then it moves up the other way. You don't know what the next headline's going to be. I mean, you got to think, okay, well, is it China? Is it this? We don't know. Maybe it's going to go up. It could go up, but I just feel like you're chasing it a bit here. So I'd rather wait for a pullback to buy.
Well, we're in a great area. I really am very comfortable with this area because you got the highs, you got the high in the spider, you got the high in the S&Ps, and it's in a range. So, instead of some days you're real aggressive and you're like, okay, the market's going up, or it's definitely going down. I'm definitely in a wait and see mode here, minus any tweets here. But man, that resistance is there. It's sitting us right in the face. We're going to get a chance to bust through it. If not, do we have more work to do in the 2,800 handle? I don't know about the 20. Still, that 2775.75 low looks far away, but definitely got a trading range at the top of the trading range.
So other earnings, obviously we're full into retail earnings season here. Let's go to Kohl's. This was an interesting trade that I almost had. Just off the earnings report. And sometimes I do trade the headline number because I feel like there's sometimes algo overshoots, which I've talked about that before. But give us the details on the Kohl's.
Kohl's was a beat EPS $1.55 versus $1.53, sales $4.43 versus $4.2 billion, but comps were down 2.9% on a year-over-year basis. So comps, same-store sales, same metric, down about 3% on a year-over-year basis. They also reaffirmed their full-year EPS guidance. They're going to make between $5.15 and $5.45 for the year.
Yeah. So I saw the headline numbers. I saw the algos hit it down. I believe they actually hit it down to the 46 handle. And I'm looking at it, and I already kind of had a bias to buy it in my head if it pulled back because I thought the bar was set very low for Kohl's. So I'm looking at a 47 offer, and I'm like, I see the guidance, and I was like, well, the guidance is actually reaffirmed. I'm like, this report is definitely not great, but it's not bad. I think it's good enough. And I went to lift the 47 offer, and it traded right as I clicked it. Like I literally was a split second too late. Sometimes I think they see the order coming up the queue and they grab it on you, but that's another story. But anyways, I clicked it traded, and then the next thing I'm looking at is a 48 offer. It would trade up 47.5, 48, and then it's off to the races. And it actually went up, I believe, to $51 or maybe even a little bit higher than that. So kicking myself that I wasn't faster at lifting the 47 offer. There's a quick and the dead in this game. That's what Ferry Hamza used to always say, and I agree with him. I mean,
what was this? What was the saying?
There's the quick and the dead.
Oh, I don't remember.
Isn't that from a Western or something? Isn't that somebody else? But Ferry Hamza says it sometimes. And he said it on our show before.
Okay, cool.
I believe he's taken that from some Western or something. I don't know where that's from. Somebody will know. Maybe that's where that's from. I'm not a big Western fan, but it's a good saying. And I looked at it, and I had that initial hesitation, which is what did me in. My initial gut instinct said buy the 47. And then I looked, and I wanted to analyze a little bit further. And then I'm like, yeah, I'm going to do it. Because what happens is on the earnings report sometimes, and this is obviously they do a lot of things. They have an initial move, and then in almost all cases, the earnings reports have initial move and then a pause. And it's that pause where they either decide to turn and go higher and get it back, or they pause and then there are more sellers that come in and then it continues lower. So it's that pause is where the opportunity is. So it tanks down to the 46 handle, and then there's the pause. And then they're thinking about it because that's the initial algo move. So the initial algo move is now gone. They've knocked it down $2. Are they correct? That's what I'm analyzing as a human being. Are the algos correct on this one? And I was like, I don't think so. And I think this could be the pause where it could actually turn and go higher. And that's why I tried to lift the 47. Like I said, I missed it by a split second, so disappointed there because it would have been a really good trade. I mean, the thing with 48, 49, 50, I mean, even my scalper blood probably would have made at least a couple of bucks on it because it was so fast when it rallied. But I mean, that's, you know, that's that pause that gives you an opportunity. And this is not for newbie traders, like trading earnings reports. I've been in the game a long time, so sometimes like I feel like I get a feel for it. I was kind of biased, like I said, because I felt the bar was already low for Kohl's with the disappointing Macy's number. The bar was set very low for Kohl's. And I looked at those numbers, I was like, I think it's good enough. And I think that's what the market is saying here this morning too. Now, you know, it's up $2. Were these fantastic numbers? Now the comps weren't that great. I mean, I don't think I'm jumping in saying this thing's going up $5, $6 here today. But on that initial headline, when they knocked it down, there was a quick opportunity.
We got some Western fans here. Quick in the Dead. It was Sharon Stone and Gene Hackman.
Is that where it was?
Yeah, it's called Quick in the Dead. And
I knew it was a Western.
I've seen it. I'm not a Western fan. But
I'm pretty sure it's Fari that's cited on our show before.
Blazing Saddles, I thought was a pretty good Western. Triple D Spice is saying, don't be a weenie for a teeny, but he wasn't.
There's no teenies, and
yeah.
I'm looking at a 46 bid to 47 offer, maybe a 46.5 bid. Like you're looking at like a buck risk, or even more. I mean, if you're wrong, and that's the scenario too, right? You're gonna have selective perception here and say, oh, why didn't I buy that? Because it's $50. I mean, in some cases, those things pause and then it falls another $2. But I was pretty convicted, like in my feel, that I felt the algos were just on the initial headline. They hit it because of the comps. And then, you know, it came out actually, like sometimes they kind of spray it out, you know, through the news wires there. You get the initial and then, you know, they're like, you know, reading it through and then the guidance came right after, like, you know, 20 seconds after. And I was like, the guidance isn't that bad. And that's why I think they turned around by it.
Also on the pre-market show, I asked you if you would have went 147.5, or not 147, 47.5 bid. Would you have gotten anything? And you said
like after the 47 was gone, then quickly go 47.5, but not usually on the initial, because once you got buyers coming in, they start lifting offers.
Right.
So usually on these earnings reports, you got to take liquidity. You want to get in it fast. I mean, if you're thinking if you're trying to call the turn, it's coming in and you're throwing a bid out there, I mean, that's a different scenario. But once it's got the pause on, and this pause is sometimes only for like 30 seconds, but once it's like made the initial algo move and the pause is on, it's like it's now human being time. Human beings are digesting what they're reading because the algos are done. They already made their move. They made the call. They said, oh, initial headline is bad. Once it starts turning, then you get the algos. Obviously, you know, if anybody's running an algorithmic, you know, you got the big guns. They maybe don't care. They lose a little bit of money on this because they make everything else. But the smaller guns are like, uh-oh, algo is wrong. And the human being analysis coming, trying to get the algo out of trouble. So then they've got to come in and cover too because their initial algo was wrong. So, I mean, it's the whole point of my story is that you have the initial algo move and then you have that pause. And that's where the human being has a fantastic opportunity to, you know, participate.
Price discovery.
And the price discovery process. And that's exactly what I'm doing. I'm not trying to, like, on these headlines, most of them, I'm initiating, like when something, you know, all of a sudden happens and, you know, a stock is taken over or whatever. I mean, it's not that simple, right? It's not that simple to just come in and, you know, compete with the algos and say, oh, I'm going to write a faster algo and participate in that initial move. It's that second, you know, that where the human being really has an edge, because the algo doesn't have that, you know, at least not yet, because we're not full Terminator here, but they don't have that ability to think as well as a human being. I don't believe that I don't believe they're, even though you have IBM Watson and obviously beats the Jeopardy, I don't think they're at where our algorithm can think like a human. They're trying to get there, and eventually they might get there. But they're not there yet, at least not in the stock world, not from what I can see. So there's that initial, you know, after the algo move, there's always an opportunity for price discovery in the process for a human being who can actually think. So there you go.
All right, Spencer, you wanna move this along
there's
here?
one more earnings report that we haven't gotten yet. That's TJX. They're usually out at 8:15 or 8:30. It looks like today it'll be 8:30. So we haven't gotten that report yet. I did want to talk about Sarepta here a little bit. This one, I guess, the market was surprised by. So they have another Duchenne muscular dystrophy drug in the pipeline that got a complete response letter, CRL, from the FDA. That's bad news whenever you see the letter CRL with regards to a biotech company.
What's that stand for?
Complete response letter.
Okay.
So this is the FDA saying, "Hey, we're rejecting your drug for approval, and here's why." They cited 2 specific risk factors. I don't know if you need to know those, but the bottom line is the second Duchenne muscular dystrophy drug for Sarepta. Remember, they have Exondys 51. This is their other one. Is just huge huge setback this morning for that. So that's why Sarepta is down here. Last I checked, it was 15%. Now it's
step back for the stock. I mean, this is a big down 20 points here. They tried to rally it right off. They hit down at like $96, then it rallied all the way back up to 109. Crazy, these initial moves, and then the initial pop back, and then obviously it's continued to leak since then. Back under. Let's see what it does. The 95.21 low from December 28th. Can that hold?
Guess what the pre-market low is?
After hours last night, same price. What was it?
95 even.
So right there. So it already bounced there once. It's amazing how these levels do. So, we always say technicals work very well in the absence of news, but I will also say that technicals work very well when, to kind of figure out where a stock is wanting to go as well. So after the news. So, when the initial news happens, I do look at the chart and say, okay, where is the next support level? Because that's maybe where they're going to take it to. So there is a place for technicals even on news. It's like, okay, well, the news is going to dictate the direction of the move. Now, where is it going? So, because, I was pretty rough on technicals yesterday, and I was thinking about that, and I was like, I shouldn't say, I'm using them for indicators on where it's going. It's like, I think it's a poor predictor of which way that stock's going to move when there's going to be a headline number. And that's why you have people like JC Peretz that typically take their trades off before they go into a number, because it's not going to tell you whether the company, sometimes the technicals can be a little bit of an indicator. I mean, especially if the stock's been running up because maybe some insiders know something. But for the most part, I mean, you've got a binary event where you have an earnings that's going to be good or bad. And once that comes out, then, you can look to your next levels to see, okay, well, it's a bad report. It's going down. Where is the next level going to be? I mean, that Sarepta news comes out of the blue. The only thing we can do at that point in time is say, okay, well, what do we have, when I look at the levels? And that 95, and obviously some other people looked at it too because they bounced it from there already once. So that's the level I would keep an ey on for the or for the today's session as well.
That was a monthly low. That was a monthly low in December of 18. I'll just give you, Dennis gave you the number on the downside. See what someone's buying some stock here around 99. I guess someone's selling too, right? That's a Prince, but area of interest ahead of that, the lows in your last 4 brackets, let's just call it 98.60. So I don't know if there's a little iceberg there trying to get some stock, pick up some stock or whatever, where you're finding support ahead of that low. And since you had that bounce, I'll just give you the high this morning because the after hours is a little bit different. Your high at 6:30 this morning bracket was 104.95. So that's $6 away and could get there, but that's my short-term resistance here in Sarepta.
I also forgot about Medtronic. They had earnings this morning. Medtronic, of course, the medical supply company. Yep. They beat on the EPS, they beat on their sales, and they raised their full year adjusted EPS guidance by 10 cents from $5.44 to $5.54 on the low end of their range.
I mean, it's new all-time highs. Let's see what it does at 110. You just start when you're looking for numbers and you don't have anything to look at when a stock's making new all-time highs. At least it is on the monthly. I don't think I go back to 2012, so I'm assuming it's all-time highs, at least 7-year highs. I just go to the whole number, so I go 110, takes that out, then you think 115, takes that out, then you think 120. Like you're going in the nickels up. That's really where you're looking at if you're looking for the next resistance point. So I would think it might be running to a little stall at 110. See what it does. Takes that out. I start thinking it could go to 115. So it's very difficult on these ones to say, okay, I think this is the top. I think this is where I'm going to go short. I hate shorting stocks making new all-time highs. So I'm probably just not making a trade on this at all. Very difficult to trade.
Yeah, where'd we stop at so far? I'll just give you that level and 109.90. That's your pre-market high. Only backed off 40 cents through then from that level. So keep an eye, just like Triple D said there, 110, 109.90 pre-market high in Medtronics.
Also, TJX reported, just to finish them off.
Are they
Okay.
out?
Oh, they come.
No,
it was $1.17. I assumed it was out, but they're right. They usually tell 8:30.
No, they're either, if they're not at 8:15, they're at 8:30. So
they're probably just up because every other retail stock is up here this morning. Kohl's is lifting the retail sector here this morning, at least at the start. And Home Depot helping too. So retail is looking a little bit stronger here this morning. So
yeah, I've had my eyes peeled here for TJX. I don't see the numbers.
Keep it peeled, break in when they come. I want to go to ratings for a second because
Sure.
we have an eye opener here this morning on the ratings land. Beyond Meat catching an upgrade from JP Morgan. This one comes out of the blue after the stock looks completely broken. This is up $10, and obviously they're influential big time. This is going to help the bull case here this morning.
They're trying to time this thing, I think. JP Morgan must be trying to time this because on June 11th, they downgraded to neutral, and they lowered their price target $1, but it was still 120. And now 2 months later, here we go. They're upgrading it back to overweight, and they're raising their price target to $189. So.
I'll tell you, they were very, very influential. That's why Dennis is mentioning that. When did they do that?
I remember they.
Yeah. It was on June 11th.
Yeah.
And that thing went from 168.10. That was the close. Opened at 150.
And went down to 125.
125.23.
Because they were one of the first analysts to come in with the downgrade.
Right.
And when the stock was going straight up. So that's why it was very influential. These guys are holding themselves out there. I mean, they aren't going with the flow at all. This thing has been weak. Now they come out with the upgrade, so they're trying to stop it from going down here now.
So remember, we had the 2 upgrades on back-to-back days. We had JP Morgan and Bernstein. JP Morgan on June 11th, Bernstein on June 12th. Now one of those downgrades has just said never mind.
My opinion is a no touch. I'm not going to short it. Probably can't still get a locator. Maybe I can. Should I go try? Let's just see. I know because they had that. Maybe I can get some locates on this thing now. How easy are the locates?
Probably lighten it up a little bit, huh?
No, I'm still no good. Can people get locates out there? I mean, I have another place. I don't have my locate broker up though. So
Anne-Marie Band is popping into Google Chat, and she says, "Remember that 150 level?" She said it will likely fade, but if it holds over 150 zone, it will likely hold on the short term. So there, she's sticking with a nice round number there, like 150. You got a couple lows in at the. We'll just split it and call it the 140 area. If it reverses hard,
that's what you got. It's got to hold there. If you're bullish, you don't want to see it cut through there. I just think people caught in this thing now, long. People who were speculating this thing was going to 300 or 400 and they're going to get rich on it. It was silly at $100. It was silly when it was from a valuation perspective. The valuation makes no sense whatsoever. I still think when I look at this a year from now, even 6 months from now, I think it's under $100. And I said, I don't know the path for it to get there. And I said that, and I was long the thing a couple times, just for trades, because I was like, it's breaking out. You can't argue with the technicals here. These technicals look broken now. So it's coming in, and it's up here this morning. I just think there's a lot of overhead supply. I don't know where they come in. Could they rally to? We know that JP Morgan can move this thing $20 on a rating because they've done it before. So this thing could go 160, 165 today. It could. So it's hard to just come here and short at 154.50. I tend to think it will fade back within a few days and back to those lows. But that's my opinion. Very hard stock to trade. It's got a lot of, it's the story behind it. It's still the wild card. What if they get like a big contract from some big name like a McDonald's or something? That could be a wild card too. So it's a difficult stock to hold. There's headline risk. Obviously, the rating is driving it this morning up $10, but I think there's easier money to be made in other stocks.
If you have a target like 164.14, that was your high on August 15th, or 166.75, just use it. Get it out there. If that's your target, and JP Morgan's helping you, just use it. Use these ratings advantages, to your, to hit your
100%.
targets,
Great.
Yeah.
That's a great tip, because, maybe you're right. Maybe there's a stock. Maybe this is a stock that you wanted to get out of, and maybe this is going to give you the chance to get out of it today. Maybe you didn't like, okay, I'm going to sell if it breaches, and it just went straight down. You got caught a little bit. That's what is overhead supply is all about. I think there's a lot of people who are caught long this right now, and some of them will be happy to get $10 back this morning, maybe $15 back if it really gets silly off the hop, which it could. I just don't think the follow through is going to be there unless it has some contract or something. I think when the dust settles here a day or two from now, I think it starts to leak again. So I think this is more of a selling opportunity. I think it's more of a selling opportunity than a buying opportunity. But I think is the key words here. It's tough stock to trade.
All right, S&Ps are continuing to head north here. We're at 29, 28.
Very resilient.
Yeah, very resilient, even with the TLT up 96 cents. Your
Yeah.
banks are a little bit in the red here.
As they should be.
Yep.
But it's weird day. TLT, it's not a lot of days you've seen TLT trading higher and the market trading higher as well. So I don't know if that's going to continue. But, I mean, it's not extreme or anything. But I'm looking at opening imbalances here, too. Quite a few sells out there. So I'm more inclined to sell this rally here as opposed to chase it. General Electric, 526,000 to sell here this morning. That's significant. Stock is still trading up a penny. Main reason is you had another headline come last night where one of the insurance funds or something, Spencer. I didn't read the headline. I just kind of saw the headline go by, but I didn't read the story. What was it? Something defended again.
I do want to. I don't know, but I want to go to TJX here because they're out now.
Oh, okay, great.
62 cents is their EPS. That's in line with the estimates and at the high end of their guidance range. Net sales, $9.8 billion versus a $9.9 billion estimate. So a slight sales miss and in line on the EPS for TJX. I'm looking through the release right now to see if they gave guidance. But give me a second here because there's.
What did they like? They slammed this thing down to 49.
The news algos are nuts. They're nuts sometimes. I mean, and obviously now, so right now, this is a good example. You are in the human being analysis period, the human being price discovery. This isn't all algos right now. Algos hit on the initial number, and now you got some human thought going in here. So do they like it or don't they like it? I don't have the numbers in front of me, so I can't tell you. But all I can say is they hit it on the initial numbers, and that's they're crazy. They're really aggressive, and I think they're wrong. Like I think some of these that are running them, and it looks like it's going to come back in a bit here. But I mean, they hit that initial number. They could have got 51 just there. So I don't know what they're doing. Sometimes they're so aggressive.
Let's just take a look at it. We've had a nice range, a nice drop, a little bit of a pop. We gave you that 49.33. That's the current low. That coincides with the recent low of the move. So 49.05. That was your low back on May 29th. So big old level there on the dailies as well as the monthly charts to see if it holds here. I think to get positive, to feel good about this stock today, you got to see it over the closing price from yesterday. The closing price from yesterday is 51.55. So there is your resistance. 49 even, 51.55. Your early trading range in TGX.
I just, just to reiterate that point that I was making with the algos, that like people really believe that you cannot. There's a lot of people, and I hear it all the time. You can't beat the algos. There's a lot of dumb algos out there. Don't think they're all smart. I mean, the Citadel ones that are making markets, those are, very informed algorithms. Those are ones. It's not those companies that are coming out here doing this. Some of these are written by, you can write some of these things fairly simply. Now, there is definitely some uninformed traders that are playing with algorithms. I mean, there's retail that's given tools of this sometimes. I mean, very scary from my perspective. But some of these news algos, it's impressive that they can read a headline and make a trade off it. I mean, that's impressive in itself. But it's, that technology is getting better and better, but it's just the parameters that some of these people are giving them seem to be just way too aggressive. And that's where the opportunity for you as a human being is. 8:55 or 8:35 though. Yeah, let's get Gil. Maybe we can ask Gil some of this stuff too.
I want to bring on today's guest, Gil Morales. He is the author of the Gilmo Report and the managing director at MoKa Investors, a frequent or semi-frequent. Actually, we bring his name up on the show a lot. It seems. So it's good that we get him on here this morning. Gil, are you with us? Good morning.
I'm here. Good morning.
How's it going?
Not too bad for 5:35 in the morning, but I've been up for an hour, so I'm awake. Just nobody else around here is.
Coffee, lots of coffee.
Like best. No, actually, no coffee, just green tea. How's that? Green
Lot of work.
trading tea. I have a special brand. I may be starting to market it soon as trader's tea. Gets you going in the morning. I won't tell you what the secret ingredients are.
I need some of that trader's tea.
Yeah.
No, Dennis, you don't need any more caffeine.
I don't take any.
Yeah, you don't need any more caffeine. So
the market is caffeine, right?
Exactly. So Gil, since we last spoke, we've had a bout of volatility here. How have you been sort of approaching things?
I'm just playing with it on a short-term basis because that's about all you can do. There's no real trends in the market. You see stocks flying one way and the other, and the market flies one way and then the other, depending on what's being spewed from the Trump administration on a daily basis. And of course, we saw things last week, I think, was a great illustration of what you're seeing, because I think last weekend, the weekend before this past weekend, they were talking about how the Chinese were saying that they're willing to possibly start phone talks again. And the market shot up, I think, on Tuesday we went down 400 on Monday, up 400 on Tuesday, and then down 800 on Wednesday. Was that the pattern? And then towards the end of the week, they start cooing about restarting talks again, but nothing concrete has occurred. But you see these huge moves, depending on what's coming out of the Trump administration and what the president himself likes to tweet. I think the guy's just a complete goofball. And I think they're just wreaking havoc on the market. So it's just real volatile. It's almost, as one trader I know put it, it's untradeable macro risk. And so all you're doing is jumping in when you see something setting up and then jumping out before it heads the other way. And that's really all you've got. So, you sit here and we all try to, since we're all commentators on the market, you try to act like you're, you know what's going on and you're going to tell people what they should be doing. And the reality is you don't know, because on any given day the situation can change very rapidly. And that's what you're faced with. So, it's a good day or a good time to be sitting on the beach mostly.
That's probably good. That's probably a good thing to do here. Just go to the beach. Just go to the beach and just forget about the market for a few weeks. That's probably good advice. Good life advice too.
Well, there will be a trend eventually, I think, sure. But right now, it's just you don't really find it. You can get crossed up very quickly. I'm thinking back to a couple of weeks ago. I can remember being long stocks like MU and a few others, and they were doing pretty well. They were up nicely. And then all of a sudden, Trump comes out with this tweet on, I forget what it was, on ban on Huawei or something like that. And then I know MU suddenly reversed a total of about 5 points to the downside. But I had already sold my positions just because they had stalled out during the day. And I don't really trade things for very long, maybe a day or two at the most. So at that point, I was thinking, okay, I'm just going to back away because everything's starting to slow down here. And I go off to the bathroom. Next thing I know, I come back and I see all these things are just getting hammered. And had I not bailed out, that could have been a very costly day. And that's really what you're trying to do here. So,
what do you do when, like, let's say, you weren't flat on something like that, and you get the initial
scramble.
You just scramble.
Yeah, but the other thing is you get to the point where you're afraid to leave your desk for even a minute or two, because you can come back and things can be quite different. If you go back and look at that day, and I'm trying to remember exactly what day, I think it was a couple of Thursdays ago when that occurred. And you can see everything's up on the day and everything's hanging in there okay. And all of a sudden, boom, there it goes. And, how do you trade that? How can you deal with a market where you can't go to the bathroom without it changing, a percent or two in an instant? It's not like the good old days when you could just buy stocks and then go to lunch for an hour and come back and things would not be, completely going the other way. It's just bizarre. And I've been doing this for 28 years. This is freaking bizarre and very difficult to handle.
What do you think the big boys are doing? I know you've worked with, with different funds, with Bill O'Neill and stuff, and us commentators and our shorter term traders and stuff, we can, capitalize on these moves and stuff. But when you're responsible for billions of dollars, you're not making, snap decisions based on a Trump tweet here. You see the institutional order flow here. You've talked about the institutional patterns that come in, accumulation. I mean, what do mean, what are the big boys? I mean, how, they think there's a lot
here's
more meat on the bone until the election, or pulling the reins a
Who
little
are
bit?
the big boys? If you're talking about mutual funds and other traditional institutional investors, they're not really that much of a factor in the markets anymore. And I heard you guys talking about algos. I think it's mostly machines that are in there, and there's no real accumulation because you don't have the drivers that you had, say, prior to the early 2000s, where you had baby boomers pouring money into the market for retirement. That's what started the secular bull market that began in the 80s and into the 90s. And you don't have new investors coming in. The millennials are not really enamored with the market at all. They'd probably rather trade Bitcoin. So I don't think the traditional institutions, are that big of a factor. And I have data that shows that. What the dominating force in the market are what they term non-financial corporate. I'm not entirely sure what that is, but I'm assuming a non-financial corporate is some sort of an organization that is not a bank or a trust or a mutual fund, but rather some sort of group that is trading in the markets, and that's where most of the action is coming from. The other thing you have is record buybacks, or you have been having record buybacks because of all the liquidity being poured into the system. So that's really what's driving the market, and I think that shows up in the patterns of rotational movement that you see in groups. Like, think about, I think it was in early June, the semiconductors were all flat on their back. They had been hammered, and then all of a sudden, boom, there they go, and they shoot to the upside. Then they all start making new highs 3 weeks ago, and then they all start breaking down from there. So really, you just get this wild rotational action. And unless you have a way to buy stocks off the lows of their patterns, you're not going to capture the meatiest part of the move. So the semiconductors, in fact, the last time we were talking, Micron, had just gapped up off its lows after earnings, if you guys remember. And that was actually a buyable gap up. And I was skeptical of it, but it kept going. And I'll just buy it anyways, just because it's a setup. And it keeps going. And you're sitting there looking at it, and you're thinking, why is this thing going higher? The fundamentals are still terrible. They lowered guidance. Their earnings are putrid, down to what, 220, and from $4 or $5 they're saying. Yet it just keeps rallying, and then it breaks out. And then when it breaks out, that draws in all the O'Neill style breakout buyers, and then at that point it fails. And you see this happen over and over again. So that's what you got, this highly rotational market, and you need to be picking up stocks off the lows, or have ways to buy off the lows, rather than chasing breakouts and thinking you're going to catch a big trend. Just not there.
This market seems on, especially on certain stocks, like I can't, imagine trying to be a fundamental analyst and trying to figure out this market here when you can look at a stock like Beyond Meat from a fundamental perspective that, can trade,
Yes.
At ridiculous valuations, and you can look at some of these biotech stocks that are trading 4 or 5 times earnings. I mean, it's like
Right.
the metrics are just almost seem impossible to compare. But
Right.
what do you do? Like for instance, on a Beyond Meat, I mean, this is obviously all kind of a little bit of a cult stock almost, I'm sure, where you've got a lot of people who like the story, so they buy the stock. Valuation, who cares? Or I think it's going to 500 and I'm going to buy it.
No.
I mean,
No.
how do you just trade this just with the technicals, or do you try to incorporate some of that thought process?
And you get short-term trades, and all. There are a few places I thought I actually wrote in my newsletter, where it's well documented, that when it was hanging along the 20-day line back in early July, you could have bought it there, and then as it is finally cleared and closed above the $200 level, that's what I call the Jesse Livermore century mark buy rule, because he used to look for stocks breaking through century marks, 100, 200, 300, 400, and as he puts it, in reminiscences of a stock operator, that when that happens, a stock should get up, 10, 20 points in a jiffy. Now, you don't normally see that these days, but in this case, Beyond Meat ran up about 37 points in a jiffy from there in a couple of days. So you had a quick trade ahead of earnings, and you take it. And then when it comes back below that $200 level, and that occurred about 3 weeks ago, then it turns into a short. So Livermore would also short stocks when they reverse back through the century mark after going above it initially, and that came straight down to the 50-day line. And then I wrote last week and also over the weekend again, just telling everyone that this is a short once it closed below the 50-day line. And then we got the big break. What's today? Tuesday? So that would have been on Friday. So I wrote about this on last Wednesday. And sure enough, there it goes. Now what you're doing, if you look at this carefully, you go look at the low of late June, which is somewhere around, what am I looking at here? 138.34. You close today. What did you close at, or yesterday? Is that right? Let me see if I got this right. Hold on. Can you guys see that? 138.34. Yeah, that would be a low. So now yesterday you closed, or you dropped to 136.27. So you undercut that low and you're trying to hold in here. So there's potentially a trade up to the 50-day line from here using that low as your stop.
And it's trading up here this morning because it got an upgrade. So it's actually up at 154 now.
Yes.
JP Morgan.
So there you go. If you had bought it yesterday or Friday on that undercut and rally, that's an undercut and rally setup. That's a setup I use where you undercut a prior low in the pattern, and generally after a stock has come down a ways, and they'll shoot back to the upside. Now, so there it goes. Now you had the technical setup on the undercut and rally long setup and entry, which would have been yesterday and then Friday, and now you get the news that pushes up. So a lot of times the news to some extent will confirm the technicals, and it's coincidental, I think. But it was there. Now, what I do then, what are you at now right now? You're trading
154.
154.12 on the bid. Yeah, so I'd be looking. It's possible it could rally up to the 50-day line, and maybe it's a short up there. Maybe the 10-day comes into play. I heard you talking about this a little while ago, and I think you guys are right. It's going below 100. It's probably going to 20 eventually, along with Tesla. Everybody's been saying that but who knows, how long it'll take. But I think it's done. I think it's, no pun intended, it's cooked. And their product, I think it's terrible. I've tried it. And I'm a vegan mostly. I'll eat a little bit of fish here and there, but I would never eat that stuff. And it's so bad for you.
Gil, have you had the Impossible Burger? Because it's a lot better.
I've heard it's better. And but I still don't trust stuff made with expeller pressed canola oil, and it's all processed food. So I don't like to eat processed food. If I'm a vegetarian and I want protein, well, I got lots of my friends, the beans and legumes are out there for me to eat. So I don't really see them converting vegetarians, because once you become a vegetarian or vegan for a while, you become accustomed to some of the more subtle flavors that you get, paying more attention to your food preparation. I think it's much healthier. That said, to me, it's a fad. You're not going to convert dyed-in-the-wool meat eaters, in my view. And even my doctor will tell me that having a good piece of beef, like a low-fat filet mignon that's pretty lean, is much healthier than one of these things. So,
Gil, besides Beyond Meat and Micron, any stocks on your radar today?
I'm watching CrowdStrike. A CRWD. That's probably the last IPO holding up. I think the others have all died. And what I'm watching here, you notice it's right now we're bid 99.65 in the pre-open or pre-market, and so I'm watching it at the $100 level. Yesterday it was shortable in the morning, or actually the last 3 days. Every time it's rallied up to 100 or just above, it's been shortable. And yesterday you could have picked off about 5-6% on the downside on that, and then it stops around 96 and it heads back up. What I'm watching for is whether this thing can decisively clear the $100 level, and I would look for something like that to occur if we see the major market indexes, particularly the NASDAQ, push above the 50-day moving average, because we're just under them right now, and that may serve as near-term resistance. So overall, I'm more inclined to short this market rally than buy it. But if that happened, then I might look for something like CrowdStrike to push through 100, at which point it would become a buy there and you use 100 as your stop. Now, that said, if it reverses back through 100, then I go after it on the short side, which I have done a couple of times already. And this sort of looking at stocks both ways. How could it set up long? How could it set up short? This is really the only way to approach the market, and it's what I refer to as a 360-degree approach. So I know there's a 360-degree trading system out there for currencies, but that's not really what I'm talking about. It's more the idea of being completely aware in 360 degrees of how the stock is trading, where it's trading in its pattern, and how it could set up in real time, and then you react to that as you see the information coming in real time. So in essence, it's seat of the pants on the fly type of stuff, and not easy to pull off unless you're very quick and you don't go to the bathroom.
Real quickly before you go, do you have like a stable of stocks, maybe 10, 15, 20 stocks that, you keep and then you wait for your setups? Or are you more, and changing those stocks, putting them in and out? Or are you more like, okay, There's news on Beyond Meat today. There's news on Sarepta today. I'm going after the big boys. There was news on PCG yesterday. Is that what your style is, or do you have that stable and you wait for your setups?
Well, I generally focus on about 10 to 15 stocks, and that's generally the group that I'm working on at any point in time. And I'm either doing what I call campaigning them, which is coming in on a daily basis and then going out before the end of the day, and then putting my position on back on the next day, because I do not trust the market on an overnight basis. I don't want to hold very much overnight. So I do focus on a smaller group of stocks that is then culled from a group of stocks on my long watch list, which right now is about 80 names altogether. But I go through that on a weekly basis and cull that down to a smaller group that I want to focus on during the week. And that may shift a little bit as we progress through the week. But on any given day, the way this market moves, you cannot look at everything. And if you are, you're probably going to miss something within the group that you're most interested in. And so I try to stay focused on a smaller group. And that includes, names like on the short side, Lyft, Uber, on the long side, and possibly also the short side, CrowdStrike, Pinterest, Zoom telecommunications, video communications, which is a system we're using right now. Some of the semiconductors, Micron, KLAC, Applied Materials, Advanced Micro, Roku is another one I like to mess around with. Snap, Twitter. So, those stocks I would consider to be in my group of my mini universe of names that I'm watching on a daily basis. And a lot of times I'm just trading them. But you guys have been doing this for a while, and you don't make big money flipping stuff on a daily basis. It keeps me busy, I suppose, and my wife probably appreciates that because I'm not bothering her. But you don't make big money that way. The last time I was up big was a couple 100% was back in 2014. I think it was. And back then I was sitting with stocks a lot longer. And so I find it much more difficult to try and trade this way. So like I said, it's probably a good time to take a break or just not, right now I'm not playing with very much money, and I keep things pretty small because it's just not really worth it to me. What's really working for me right now has been my precious metals positions, which I've held since the year 2000. And silver is getting going again. And gold, I think, is going higher. I think the race to zero continues. So that's one area I think people should be looking at. However, you have to be opportunistic and look for that news event that drives gold and silver down temporarily, like we had last week. You can look at a chart of the GLD, and you can see how it skidded down to the 10-day line. That would have been last Wednesday, and so it comes in there and you can step in opportunistically. At this point, I might look for a test of the 20-day line down at 139. Go ahead. You got something?
All right, Gil, I think you're breaking up, but we're going to let you go here. Gil Morales is the author of the Gilmo Report and the managing director of MoKa Investors. Gil, thanks a lot for your insights, as always. They're greatly appreciated, and have a good rest of your morning.
Yeah, you too. Take care.
Thanks, Gil. S&Ps, we did have a little pop up here to 29.25, and then Triple D said, I don't know why we're up so high, and we've pulled back a little bit. Really trading hard in the 29.20 handle.
The tea leaves, right? I mean, I'm looking TLT's trading higher. I've seen a bunch of sell imbalances, like not a ton, but enough.
Right.
I'm seeing some bad stories. I'm seeing a decent story with some of the retail stocks, but I'm not seeing the reason for us to be trading higher. I see a lot more reasons for us to be trading lower. So I mean, we've fallen 5 points since I just said that on the show, and I think that's just the way
warranted. Yeah, right. Digestion period there. Okay, all right, Spencer. What else do we got?
It's those little indicators that give me an edge. So that's what I'm trying to do. I'm a short-term trader, so I'm looking for little pricing inefficiencies. And I think when the market's trading higher, and I'm getting fill on stuff, which is why I'm losing my train of thought. But I think when the market's trading higher and TLT is trading higher, I think that's an inefficiency. TLT is starting to go a little bit higher again, and the market's starting to sell off. It's not a coincidence.
I know you guys have been bearish Canopy Growth for a while, but they're getting a vote of confidence this morning from their former CEO, Bruce Lin, who said he bought some more shares and likes the company for their intellectual property protection. And so CGC getting a pop. He was on CNBC like an hour ago.
Well, it's a pop, right?
It helps. Vote of
It
confidence.
helps.
It needed it. It needed a vote of confidence. Again, I've been right here every time I've said about sell the rallies. This has been the last couple of months on all these pot stocks. Eventually, they're going to get to a point where they're going to have an okay rally. Are we at that point yet? Maybe we're getting near it. I mean, let's look at the CGC. And
Sure.
from a valuation perspective, they still make no sense. I think long term, they're still going lower. Short term, we're just oversold here now. And I think you get down. You know what I like on the CGC is the December 28th low. 25, 26. Now you get a vote of confidence. It got down yesterday to 26.46. So buck off that December low, which was the low on the market, the low on everything basically. So you're bouncing, in that area, which is the argument that the bulls could have. Is there room to 30? Yeah, but man, you're fighting the tape. So yeah, I'm more inclined to sell the rallies. I'm going to still say I'm more of a sell the rally in the pot stocks than buy the dips.
You got a pop. You got a double pop here. I was watching CNBC. 28.74 was your first pop, and then they made another run at 28.75. So that's a stick away. So there's your resistance. That's what you need to take out in order to challenge the high on earnings day, and that was 29.62. Comes to your 4-day high. So just those levels. I mean, I've seen when these come out with these insider buy. I've seen mixed results after it. Getting initial pop, what you want to see through is the pre-market high being taken out. I think a lot of people would be more comfortable if you close over that psychological $30 level. But I did catch a little bit of that interview, and he said he was coming back on in September with a big announcement. So I don't know. That was or a revelation of what else he was going into. So
it gives a vote of confidence.
Yeah.
It'll help with maybe for this today, but there's still an awful downtrend in these things. And like we said, competition is still a major issue for all these pot stocks.
Apple here this morning is upping the ante in the streaming wars. A report from the Financial Times that not only is Apple trying to jump the gun on Disney Plus is launching November 12th. They may try to release Apple Plus before that date, but their previous commitment of a $1 billion spend on original content is now reportedly at $6 billion. So they're going to spend gobbles of money trying to compete with Netflix and Disney and Hulu and any other streaming content provider out there.
So I still got Apple obviously in my long-term portfolio. I still got Disney in the long-term portfolio. I have a short-term trade on Netflix, so I don't want to. I'm not going to
comment.
I'm not going to comment on Netflix because I don't like to comment when I have a short-term trade that I intend to get out of today.
Okay,
so I'll leave the commentary for Netflix. And
I'll just say that's a lot of money. 1 billion to 6 billion. I mean, that's a huge increase. Apple is serious. Also, they're going to get this out ahead of the Disney Plus. So a lot of different things going on ahead in this sector here. And I don't know who's going to be the winner, who's going to be the loser, but Netflix, I think, has the most to lose. Pre-market low, 305.08. It had to gap down after earnings and then tried that fake recovery up to 340. Now you're right back at that, at that 310 area. Couldn't hold yesterday. If you're looking for a shorter term target, 304.75 was your low in yesterday's session. We haven't taken that out. After that, though, we did some work under 300. The next low on that, on the daily low, your 2-day low, Friday's low, 296.27. Don't know if that's enough bad news to get it there today.
If there's going to be a trade off this, I'm surprised it's not Roku this morning because this is not the Apple's content wouldn't go on Roku at all. So if there were to be a trade, Netflix and Roku typically trade together. I'm surprised we're not seeing Roku trade.
I thought I saw a headline on this on the Roku part, and I can comment on Roku because I don't have a position on this. I thought I seen something go by that they intend to use Roku.
Really? Oh, okay.
Did I see that? No, I'm not 100%, or did I dream that up? Chad, help me out here. I thought I saw a headline going by that they actually might use Roku.
Okay, well then,
which actually would be good for the stock. I'm not sure. So Disney, Roku, or maybe it was Disney was thinking set to launch on all major streaming platforms. I'm just trying to see it. Maybe I made that up. So I thought I saw
it. Could have been Disney. Oh, you know what? No, you're right. You are correct.
Is there a headline in there?
It was from a while ago. I didn't even know that. So
I think they are going to use Roku.
Okay. then
You know what, the Roku, man? Valuation's crazy, but this stock wants to go higher. And I have no position in it, but I look at this and think that chart, it pulled back. The trend is your friend. I like that setup. Just looking from a technical basis. The story is still going. People are going streaming. I mean, I think the stock wants to go higher. And I would not be surprised if we see this thing over 140 soon. Just my opinion. I have no position on it.
All right, a little bit of a fade here in the market, a little bit of fade here in Coles too, back under that psychological $50 level. I have about 20 stocks here that we did not get to cover from the chat. So Spencer, you wrap things up. We'll let Dennis go, and I'm just going to try and rip through these on the daily charts. Probably not going to go through the news. Just give you guys a quick, simple look at these issues, and hopefully we'll help you, give you some guidelines for your upcoming trading.
Ticker Time Tuesday.
Yes. So
we'll let Joel do some Ticker Time Tuesday. I'm going to go trade the open.
If you missed
Have fun, Triple D. Call me later.
If you missed any part of today's show, before we do this, catch our podcast, iTunes, SoundCloud, Stitcher, TuneIn. Please remember all the information from our show meant for informational purposes only, not for investing advice. Thanks to Gil Morales. Thanks to everyone in our chat rooms. Now, Joel, you can take the wheel here and get some tickers with some people in the chat.
Okay, just hold on. I just want to make sure that I get my share computer sound. Just make sure we don't have any technical difficulties here. That I share the right. I'm still seeing me here.
No, you're good. Go for it.
We're good. Okay. All right. Real quickly, S&P parameters today here. I mean, we are bouncing in this 2920 handle. Keep an eye on that pre-market low, because that was actually the low from intraday low from yesterday, 930 to 415. So there's your key to downside. On the upside here, 29.32 and a quarter. That was your exact high from yesterday. I'm not going to be running super bullish if we do take out that level. I'm still going to give it some more room to 29.40. I kind of feel like we're in a trading range here, and the market's going to have to prove to me that we're going to break out of these tops here that we have. You can look at it on the spider as well. SPY, a little bit different. Didn't get the SP in there. SPY, you can see that 293 area as potential resistance, putting a damper on the move. So I'm just going to rip through these stocks here, folks, and I'll see how many I can get through. Apple, let's just start with the big dog here. Apple with the good news. Gap up yesterday, trading in the green today. Let me mark Apple off my list. Boy, oh boy. Let's see what happens. Yesterday's high, 212.73. So if this is super good news for Apple, we're going to go up. We're going to take out 212.73, and then you get into that big red candle. On the downside here, your close yesterday at 210.35, near the low of the day, which was 210. So I'm looking for some downside here on Apple. If you cannot hold yesterday's low, 10.03, Friday's low, way down at 203.84. So that's an early look at Apple. Square, a favorite of Dennis's and Jeremy's, trying to get out of its own way here, trading up 31 cents in the pre-market. Looking at the parameters from yesterday, 64.43, trading right there. So you're going to get confirmation whether or not this wants to go up, maybe trade over $65, but you're getting a look at yesterday's high above there. If you're short, look out. There's not much here until you get into the 66 handle, 66.12, 66.57 were some highs on August 8th and 9th. Etsy, the online Shutterfly garage store place, on the lows of the move, trading flat today. Swing trade, from a swing trade perspective here, you don't want to see 51.27 taken out. I see another low at 51.78. So trying to get off the mat here. I just don't like that it closed so close to those lows. On the upside, looking for a target. I wouldn't wait for 53.53. I'd see 52.91 as the high on Friday. So 53 setting up as some resistance here. In Etsy, Qualcomm, the headline stock of the year so far. trying to battle back. Good day yesterday, getting some follow through today. When I'm looking at this, I'm not going to pay attention to the high from yesterday. I'm just going to look trio of highs here. Let's just call 76.5. Prove to me you can go through 76.5 here. Nice area of resistance coming back on the downside here. You don't want to see it go red. The close from yesterday, 74.87. Also asked about PCG here. And not a good day yesterday. Held that psychological $10 level, 10.05, trading up 9 cents. I didn't see any definitive news one way or another in that. So swing trade, holding on. You want to see that 10.05 hold here, close 10.67. And if people are just going to shrug off that news from yesterday, then you're going to clear 11.56 and fill that gap up to 14.27. But another headline stock. Alibaba. Let's see how Alibaba's trading this morning. Good day yesterday. Boy, look at that 180 level. If you're an Alibaba bull, 179.98. You had another high at 180.24. So you're looking for, another high just above that at 180.79. So 180 stands as major resistance. Now clear that. You certainly got another leg higher. So had a nice sprint up here. If I was trying to protect some profits on the long side on this one, I'd give it to below the low from yesterday at 175.59. But the big run up there, I'm looking for it to continue, get above that 180, close above 80, take a shot at 200. That covers Alibaba. Got a couple questions here about Google, and I just want to tell you, these $1,000 stocks are really not my forte. It's just looking, the charts tell you something, but then actually executing orders in it is a whole different story. I know you can trade smaller lots here. High from yesterday, 1206.99. A couple other highs in that area. I see a 1205 high, and then you have another high at 1207. I know you got the antitrust scrutiny out there falling with those. So, man, looking for another breakout here. I'd just use 1206 as your major area of resistance. If you're looking for a breakdown here, 98.45 is, let's see here. That was your closing price. I can't really see any good support until 11.90.09, kind of the way with this market's a little bit of rolling over now. I wouldn't be surprised to see that. If you're holding on after that, Friday's low, 11.71.81. So that's a pretty steep fall there. A new one popping in here, BIDU. That's the hot stock of the day, moving well off its earnings report. For this one, I don't have the pre-market high up in front of me. I see trading at 113 even. I'd wait for just challenge that pre-market high. Use that as an area of resistance here in BIDU. So we covered Google. Shop. Someone asked about, when would Dennis short Shopify? He calls it like the main Canadian tech stock here. And so a lot of people are pining that one. So he's not looking to short that one. If you're looking for a target on the upside, a nice juicy target, 372.36. Your close from yesterday, 361.83. Not going to really, no major concern for me on this one. I do see almost about as exact double bottom if you could get, 347.55, 347.68, $15 away from there. But if you're looking to try along or, looking for a bounce, or if you're trying to protect profits, really like that 347.5 area. All-time closing high. If you're looking to get out at the mark like the big boys, I don't know if you're going to have a chance to do that. Your all-time closing high, 369.95. We did get a pot stock on here, ACB, Aurora Cannabis. I'm not sure if it's getting a pop. Not much of a pop off that Bruce Linton buy in CGC. Swing trade perspective. Big boys may be accumulating here in the 570 area. 3 lows in that area. A problem if you don't hold there. Where do you go to? You had a low at 533 next area. Spoos lose 29.20 here. We're 21 minutes before the open. Coal's coming right back down. So far, that's being used as a selling opportunity. Let's talk about the House of Mouse, Disney, whistleblower allegations, overstating earnings, trading down $1.50. We've talked about this one a lot. I know Dennis has been building a position in it on the long side. For me, I just worry about this whole gap area. If in fact it feels there, I'd be much more comfortable. And I'm not saying it's going to 117, 118, but I don't know. Just trying, it's holding on. I'm not going to make a big deal out of those whistleblower allegations because I don't have the details on it. But if you're looking for Disney, you had a spike low at 132.26. That area was protected the other day when you went to 132.47. So I'll call it major. I don't know, major support. 132.5 would be an area of interest on the upside. And now with its trading in the red, you want to see it go green. In order for it to go green, 135.26, that was your closing price. Excuse me, 135.29, that was your closing price from yesterday. That will be acting as resistance. Let's see what else do I have on here from my list. I hope you guys are not sticking any more tickers in here because I'm almost done. ZS, that's Zscaler. Oh, bad day yesterday. I don't know what happened yesterday, but Dennis would say, warning on a big red candle like that. I'm not trying to pick a bottom in it. And I would definitely look for more downside below 71.10, considering you had a $9, $10 down day, and your reaction is up a nickel. Not good here for ZS. If you're looking for more on the downside, oh, I do see a low. I do see a couple lows at 71. So there's the floodgates under 71. You could be looking at your next daily low comes in at 76.26. I don't know. I'm not looking at my news feed here, but we are losing some serious altitude. We are down 5 1/4 at 29.1850. Pre-market high or pre-market low 29.16 looks like it's going to be a challenge here. Roberto Wilco, you're welcome. I'm glad you like these levels. I'm trying to stay away from the intraday charts and the pre-market charts because there's more to tell on the dailies. That's where Dennis and I do a majority of our analysis. Let's take a look at NVDA. For the hot rod, haven't looked at that one in a while. Nice day yesterday. Not getting quite the follow through that you wanted. Not in, just a tad in the red here. I look at yesterday's low. I know it's way down at 163.47, but there it is. That'd be the first area of support that I'm looking at. With the market kind of rolling over here, let's see what happens at 170.78. We're not too far away from that. That was a closing price. I'd look for follow through yesterday's high at 171.42. So I'm going to do, let's see here. I'm going to do 2 more, and then I'm going to wrap it up here, get ready for the open. Chewy. Spencer had a successful trade off the IPO in that one. Spencer's been kind of quiet on that one. He's our Chewy expert. Let's see here. Not a good looking chart since it's IPO. I'll look at the daily lows in this thing, 30.63. I mean, you got four lows in a row in the $30 handle. That might be a sign of some accumulation here of the stock on the institutional side. So you do have an area to lean on here in Chewy. So what did I say? I said I was going to do one more, and that's going to be CRM for our Salesforce.com. Folks here, we are trading up 8 cents. We had a good day yesterday. Well, it was a good day until it faded. 146.14 was your high from yesterday. Use that as a target on the upside. Important area, you got 2 closes in the same area, 143.67, 143.89. So some indecision here on the market. Under 143 here, you get a nice downdraft. I am looking at Thursday's low at 1 39.75. William, thank you. Thank you. ZS was downgraded yesterday. So there, you're looking for a catalyst. You're looking for things. Boom. There was your downgrade. David, thanks for doing that up. And just because Jar Jar is such a good person in the Google chat, I'm going to look at gold futures, and then I'm going to be gone for the day. Gold trading up $3.50 at 15.10. And you're looking a little toppy here. Of course, any kind of tweak can change that at any second. I would, Jar Jar, I'll just give you the high of the move as my area of, not the high of the move, but the closing high of the move, 1531.20. That's my area of resistance. Psychological $1,500 level has been holding. You cracked 1,500 with some momentum. You got a low at 1488.90. That was on August 13th. So, folks, thanks for sticking with me today here on Ticker Tuesdays. I hope we've provided you with some good content and will help you for your trading day. Keep it an eye, 2916 in the SPOOs. We'll be talking to you tomorrow morning.